Morning traders, Paul here with GammaEdge. Today is Monday, the 30th of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, all the market models are still long-term, short-term, bullish. We are continuing the patterns we've been seeing. Hopefully you've been able to participate. We've been on this since they turned and we are looking very, very strong. In fact, you could say we're looking a little long in the tooth, but who knows what's going to happen moving forward. Market breadth, as viewed by our 52-week new high, new low indicator, continues to show this bullish broad support. We are now in day 18 of the upside expansion, started at the beginning of January. We have not seen this since 2021. We kicked the February-March sequence out of the way, and now are rolling back. This is a long period where we've seen something like this. We have 111 stocks reporting this week. This is a big week. Apple, Google, Amazon are big names, and they comprise between 12 and 24% of the S&P 500 as well as the NASDAQ. You want to be aware of this. If they catch a cold, the rest of the market could catch the flu, so be aware. Key dominant strikes that we're looking at, 4075, which is where we are right now, 4100, 4145, which is the JPM roll strike for tomorrow, and 4200 to the downside. Our key dominant strikes are 4065, which is the March JPM. It's still present, just not very effective right now. 4020 and 4000. We don't anticipate dropping much below 4000. May see it intraday. Don't think we'll see it into any of the closes in this current structure. 4100, depending on who you read over the weekend, says it's being vaporized. We do not see this. We see 4100 remaining very much in play this week. This was not a last week phenomena. So I would continue to watch this and watch the 0DTE channel within GammaEdge so that you can see what's happening there. We will note though, transitions are wider, and when we see that, get a little more uncertainty creeping into the markets as calls and puts begin to spread out. But just be aware it is moving up, meaning transition is moving up, and when we see that, that is overall bullish. Deltas continue to dominate up and down the chains. When you see this, we expect lower volatility. And until that changes, until we start seeing some cracks in the ice, either overhead or from below, we think it's more of the same. We're not seeing it today. Now, any action today could change things, but the structure today is supportive of reduced volatility as well as a call-dominated ITM and OTM structure above and below. JPM rolls their January fund tomorrow. Not a big deal for today, but the short calls at 41.45 will be removed, and that could actually start enabling us to push north even more. So we'll have to watch and see what happens here. For today, though, we think it most likely places an upper limit on the markets. The market model via the Cumulative TIK, just very quick end-of-day summary from Friday's data. Ribbon is long, it's beautiful, picture perfect. You can see the railroad track pattern up here in the short-term moving averages. And you can also see that the CT is long. Day over day, it's getting continuing the progression up. Hopefully you've been able to participate in this. We did do a write-up over the weekend, and hopefully everybody was able to read that about when you could potentially enter and do things related to the cumulative tick. We did add your ability now to run all of these scans, and we'll get you some data on the GEX ratio long entry across all of the fish pond stocks. I didn't check these for ER, so you'll want to do that, but here are the ones that are appearing for today. Note, we have no new CT signals, we just have continuations. So I would not get out over your skis. When we get long in the tooth, there's a possibility of a pullback, and so just be aware. Plus, you got to note who is actually going to be reporting this week and want to make sure you're paying attention to that. Key levels, 4100 is coincident on both the PM settled complex here on the left as well as the combo complex on the right here. No change in the combo complex. We're rock steady at 3800 to the left goalpost, minus GEX, 4100 to the upper goalpost. You can see we are starting to get the emergence of dominant strikes above us. This is pure speculation. This is actually good for the bulls, so just be aware of that. Because of that call-dominated structure up and down, we are seeing volatility pull in a dramatic amount. We're now down to 1.9%, down from, I think, 2.1 on Friday, which was more or less the range for the week last week. This is an open high-low close. This is targeted towards our premium sellers, and that pushes your ranges up in a low-vol environment. Even a little bit here, I know you're not going to be able to get a lot of premium, but you should be safe below this level and safe above this level, especially since the JPM strike's sitting at 41.45, which rolls tomorrow. The PM settled complex, as I said, delta's up and down as far as the eye can see. We've got the two JPM short calls that are sitting here, one for March, one for tomorrow. Just when you see a structure like this, it's almost picture perfect. You can see in the SPX complex where we're going to really be playing. As price moves up and down, the yellow line moves up and down. We'll see the growth of the 40.75 and the 4100s. Note that the 40.65s are of opposing sign because of those short calls, so to be aware of that. And then, of course, on the quarter levels, we'll see the 75s, the 100s, the 125s, etc., all the way on up the chain. The 41.45, just be aware, that is tomorrow, and once this goes away, it's going to be clean sailing to the north if the structure remains intact. 0 DTE, 4100, certainly in play today. Upper limit contributions from the 0 DTE, probably limited it here at 41.20. To the bottom side, 4,000. You can see we're closed right at the top of transition. It's a very clean structure, very, very clean. Not really dominated one way or the other. We have more calls coming off, but you can see we also have some in-the-money puts, which are also vaporizing, which is good. We want to see the speculative calls go in and continue to dominate the conversation. 1 DTE, this is looking tomorrow. You can see those in-the-money puts are still out there. Their deltas are dominating. 41.45 is what rolls tomorrow. 4100 again, here we are. Very, very large amount again coming off, and as you remove some of these lower strikes, that opens up the door to potentially move further north. Transition, very ill-defined here. Just keep aware, keep an eye on it. If we do drop into a transition, we like to stay in the upper section of the transition. We start pushing the lower parts of these transitions, we could get captured by negative gamma, and we could start seeing the bulls lose their traction and the bears become emboldened. When that happens, we'll start seeing deltas flip, and that's what we're looking for here. But right now, clean deltas on the 1 DTE all the way up here to about 41.10, as you can see. Looking at the crystal ball for the week, what is in play? 4100. There was some stuff out on FinTwit over the weekend that 4100 was just a 0 DTE phenomena. That's not the case. You can see it here. It's very clean. For the week, day over day, we have large amounts of the 4100 that are coming off. It has to be replaced, but also when you remove a given level, whether it be the 40.75, the 4100, or even points north, that opens the door to moving higher as long as the speculation continues. So anything above the yellow line are out of the money calls. We need to see a continued addition of these out of the money calls, and these are in the money calls below the yellow line that are dominating the delta conversation. We need to see folks basically step up and keep adding at the money and not see an addition of out of the money puts being added, which could erode the sand underneath our toes here. The other thing I want to point out, this is the expiry for the week down here in the lower right hand corner. You can see we've got a fairly significant amount. 27% of the gamma is coming off today. Tomorrow 37%, and then on Friday another 23%. So in the order, this is a big week in sequencing. just be aware that we do have some major shifts that are ahead of us, and that could be a little bit of a storm cloud. It could push on this volatility. We'll just have to wait and see. Taking a look at the combo complex, clean sailing all the way up to 42.25 with the exception of the JPM strikes, which I've highlighted here, 41.45 and the 40.65. 40.65 will persist after this week. The 41.45s will not. They will vaporize and go away tomorrow. Gamma structure, you can see where the transition is. It does include the fairly illiquid 4,000 strike that you can see here. So we're not thinking anything below the 39.95 level. There's not a lot down here. We noted last week that we had a second transition structure. It's getting smaller. It's being almost completely neutralized now. So we think this is going to go away and really become a nothing muffin for the balance of the week. Taking a look at the overall structure, no real change. This is why that 4100 was not a flash in the pan here. This was a target last week. We saw an amazing amount of growth on Thursday and Friday. It has persisted across the weekend and now exists today. So 4100 is clearly the upside target. This is a very large level relative to the 4150 and the 4200s that you see here. JPMs are sitting down here. They are very illiquid until they are rolled, and we only have one of these rolling tomorrow. That actually will clear the path north. Since we're already above the 40.65, it's more or less neutralized. We will note that the transition structure is not cleanly defined here. You can see that 4,000 line, you can see a 39.20 line down here, and then you can see where the 40.20 and the 40.25s really start switching things. So, in a clear sense, that 40.20 and 40.25 becomes where things start getting slippery. You've got a stopping bookend here at 4,000, and then below that, things get a little interesting. Downside 3,800 is minus GEX, 4,100 to the north. We think, unless structure changes, that we could continue to push north, and we're going to continue to look for an improvement in the transition structure, and just keep track of what's happening here. So with that, I'll bid you farewell. Come and join us at GammaEdge.us if you have any questions or comments. There's a pricing tab in the upper right-hand corner when you go to the website. Fill it out, 14-day free trial, all the tools turned on. Great group of traders and investors, and they can help you understand what we're seeing here. Follow us on Twitter, please, at GammaEdges with an S, and then here on YouTube, of course. If you like today's content, smash that like button. It gives me immediate feedback that I'm providing content that you want to see. And then, of course, follow us or subscribe to us, because Taylor, myself, and Michael are posting videos, typically 2 a day, so that you see what we see and you can learn how to apply this to your trading style. So with that, make it a great week. Be safe. Don't get out over your skis, and we'll hope to see you in the Discord. Thanks.